Hello and welcome to From No Crypto to No Crypto, Cryptocurrency Podcast. This is Blockchain Wayne. Today's episode is brought to us by Concierge Club, mobile private key wallet and point of sale solution. Concierge Club makes purchasing easy, safe, and the overall process more efficient while costing less, helping to make cryptocurrency mainstream. Let's dig in. Look at a market update. It is a green day. Everything is green. All the market is green. In fact, in the top 100, only one cryptocurrency was down today. Everything else is looking pretty good. We'll talk a little bit later in the crypto education corner about what to possibly expect from this. We'd like to see a continuation of this uptrend, but we'll take a look and kind of tell you where the charts are pointing. So looking at the news today. So cryptocurrency trading platform, Crypto Facilities. Now, Crypto Facilities got its rise in fame by partnering with CME to offer Bitcoin futures back in December 2017, has now added Bitcoin Cash to its list of futures products. They announced today, Friday, August 17th at 4 p.m. They said the move reflected Bitcoin Cash's status as a top 5 coin by market cap. The platform already offers Bitcoin, Ripple, Ethereum, and Litecoin futures. Will we see any movement in Bitcoin Cash price because of this? Only time will tell. It is a possibility, but we'll have to see what happens. All right, so next up, new research from Sanford C. Bernstein and Company, a research company, suggests that revenue generated by cryptocurrency exchanges could more than double to hit $4 billion in 2018. That was reported on August 17th, today. The report, titled Crypto Trading, The Next Big Thing is Here, argues that the protracted crypto bear market, which, remember, we're still in a bear market, but the bear market is unlikely to impact the burgeoning revenue generated by exchanges. Moreover, as crypto assets season and institutional demand builds up, we're going to see traditional financial sectors, are going to find a plethora of opportunities within cryptocurrency. Now, Wall Street firms pursue this cautious course at its own peril, the analyst warns, because the window in which they have the opportunity to wrest a dominant market position away from the current cryptocurrency giants is rapidly closing. In other words, if they don't move quickly, Coinbase, and if you remember, I'm talking about Coinbase every day. They are making moves to expand their platform, make their infrastructure even better. Definitely a force to be reckoning with. Coinbase is estimated to rake in about 50% of all trading revenue between its brokerage and professional exchange platforms, and now boasts twice as many users as Schwab. Many Wall Street people are worrying that that the competition that Coinbase is creating could be unassailable, that even the largest players on Wall Street will not be able to overcome. Do I want to see Coinbase as dominant as it's getting? I'd like to see some diversification there, but I definitely don't want that diversification to come with all of the Wall Street bigwigs. So that's kind of my take on it. All right, so moving on, Coinbase again. Next article, Coinbase, the U.S.-based cryptocurrency exchange, has been awarded a patent that will secure Bitcoin payments. They are working on identity platforms, secure payment platforms. They're constantly adding to their portfolio and what they're working on. That's the direction they're moving in. And Binance, who is also another one of the largest cryptocurrency exchanges, is working on the decentralized exchange, which a lot of people are calling for. There's some pros and cons to decentralized exchanges. Talk about that in another episode. But for now, let's look at this Coinbase news, what they have going on. So basically, it outlines that the exchange will develop a payment portal which would allow users to pay directly using Bitcoin from their digital wallets. The document notes that it's a major security concern for users as they fear the private keys of their Bitcoin addresses can be stolen from their wallets, especially when they visit merchant pages to make payments. All right, so moving on. If you remember, it's probably a little over a month ago, maybe not even quite a month ago, there was a secret meeting in Chicago between NASDAQ leadership and several different cryptocurrency companies. Based on a couple of sources that close to Gemini and the Winklevoss twins, it's believed that the Gemini and NASDAQ are moving closer and closer to a joint venture that allows both the NASDAQ and Gemini to list tokens and provide liquidity on a global scale. So according to both sources, there's a plan being constructed that would see the NASDAQ ultimately list top market cap coins for global trading. Now, this could be huge. This is something we definitely want to see. Gemini, you remember Gemini is run by the Winklevoss twins, who, their claim to fame initially was they were in a embroiled lawsuit with Mark Zuckerberg, Facebook founder, and a lot of the money they got in their settlement with Zuckerberg, they put into Bitcoin, and were actually one of the first, I don't know if they were the first, but one of the first couple of Bitcoin billionaires. So that is what they're working on. Hopefully that is legit. This is just speculation right now. It's no solid plans, but it's definitely something that could be coming. All right. So next up, around 40 of the top 100 cryptocurrency tokens by market cap support a working product which is active and available to the public. New research finds this week. So I've said this before, when you're researching a cryptocurrency, many of them out there don't even have a functioning product yet. They may have a nice fancy white paper, and that's all great. There's nothing wrong with taking a chance on that. Some people don't even take the time to read the white paper, but you want to make sure you're looking into this. So cryptocurrency education resource Invest concludes that the multitude of projects that launch coins in recent times often remain on the drawing board regarding real-world use cases. So they evaluated each project status, looked at its roadmap, checked its release history, and compared completed features to what the team promised to deliver in the future. So this is what was said by the research authors John Bardinelli and Daniel Frumkin. So there are many projects in the top 100 that have launched their mainnet and can claim to have a quote-unquote working product by a loose definition. However, in this case, when they were identifying the 40, they chose not to include projects which aren't actually being used by any significant measure, which means that most of the recently launched mainnets will not yet meet the criteria that they use. So can more of those top 100 become more legitimate and have working products? Absolutely. But just keep in mind, this is where we're going to see a maturing of the market. We're going to see things start to take a turn where it's not just going to be based on speculation, and you're going to see more money pumping into legitimate projects. Now, I've invested personally in some projects that after research, I feel are going to really be game changers, really going to make things happen in the cryptocurrency space. But we've seen a lot of those get pummeled in price lately, because price lately has only been driven by speculation. Once the market matures over time, which I think this last dip is really helping to mature the market and shake out some of the weaker players, we're going to see those cryptocurrencies that I mentioned really start to take off. And I'm going to start featuring a few of those on each episode in a couple of weeks, where we'll take a look into one, not just a cryptocurrency that, hey, this might be a good investment, because we're not going to give investment advice, but we're going to give you some reasons why it's a viable project, what it can do, what the potential is, and possibly even what are the working products they have right now that are making things happen. So that is it for our news update today. Moving on to our crypto education corner. So in the world of crypto trading, if you're going to get into trading, recognizing patterns can yield more for you than just looking at a guess. Thinking when you're buying at the top, not knowing if you're buying at the top, not knowing, the top of a spike, not knowing if you're buying at the bottom of a dip, or where you are in between. So we're going to look at a few indicators that could potentially identify patterns. Now, as I mentioned before, looking at technical analysis and fundamentals, it's not always 100% accurate. You definitely want to learn it because you have a better chance of predicting the trend, but it's not always 100%. The whole goal is, if you follow these patterns time and time and time again, you will win more trades than you lose, which that's the goal of every day trader, which allows you to come out, in a decent profit. First one we're going to talk about is head and shoulders. So the infamous head and shoulders pattern, it's a bearish reversal pattern that signals to traders that there's been a change in the current trend. So basically, it's identified by three peaks. The highest peak is the head in the middle, and two other peaks representing shoulders, just as you would think it would look. It also features a neckline and trend line that is drawn between the two shoulders, showing the key support level you should look out for in case of a breakdown. Typically, when that pattern is finished forming and it hits that trend line, you typically see a breakdown. Now, you'll also hear the frame inverse head and shoulders. That's the opposite. Instead of being a bearish reversal pattern, it's a bullish reversal pattern, where it looks like an upside down head and shoulders pattern forming. And a lot of times when you see that formation complete, you see a spike in the price, which begins a trend reversal. Next up, cup and handle. So the cup and handle is a bullish continuation sign identified by a bowl or half round cup that forms at the base of the pattern with relatively equal highs on either side of the edges. The handle represents a bull flag in which the price appears to be heading in the opposite direction of the current trend. This is usually followed by a continuation and a breakout from the bottom of the handle. So when you see a cup and handle forming, they are rare, but typically you'll see they're identified on the daily chart. So when you're looking at time frames, you want to move to the 1 day chart. It avoids any confusion with, any kind of intraday or less conviction. But if you see it on a daily chart, it's got a much better chance of actually being the case. You see the price, slowly dip very slightly over time, which causes, a giant cup formation as it moves upward, a slight drop, which forms a bull flag, and then another spike continuation pattern to the upside. That's why they call that a continuation bullish pattern. All right, next one we're going to look at is one that I actually posted today on both my personal Facebook page and on our, my business page, which is under the same name as this podcast, From No Crypto to No Crypto. Posted a chart, and if nobody's answered it yet and you're listening to this podcast, you can win yourself some free crypto. Head on over to the Facebook page, answer the question of what pattern am I showing on that chart. I was on the go, pulled up my mobile trading view chart, looked at what was going on, noticed what we call a rising wedge. Now, that's what we're looking at right now. So I mentioned earlier, we're going to see what's going to happen with price. We still don't know. We could still see some upside, but looking at it right now, it looks like the chart is printing a rising wedge. It's a bearish pattern. Now, you might think, if it's rising, why is it bearish? Because it begins wide at the bottom and contracts as prices move higher, and the trading range continues to narrow. So rising wedges definitely slope and have a bearish bias. So typically when you see that rising wedge formation get tighter and tighter, as it starts to move closer together, that's when you typically see the bearish pattern where it basically drops. You see the price dip, and it signifies that we were looking at more downside. So personally, I want to be optimistic about what's going on in the charts, but looking at it, don't be surprised if we see another drop, price falling out, possibly even a lower low than what we've seen in the past. None of us really want to see a lower low, but if we do see that, it does give us a chance to actually hit a true bottom. And when does the trend reverse? You wonder, what is the bottom? When is the bottom? And when will we see a trend reversal and see a bull market emerge? And the answer is basically when the general consensus of traders, a majority, agree that we have hit bottom and that we are not going any lower. So then we need to start looking at the upside. And that's when people start expecting and trading as if the trend is reversed, then you're going to start to see that movement up. Could be fast, could be extremely fast, especially with all the news that's happening in the background. I don't think it's going to take much to signify this trend reversal. Have we hit it yet? We don't know, but only time will tell. So that is it for our Crypto Education Corner today. As I mentioned before, head on over to the Facebook page, From No Crypto to No Crypto. If nobody's answered that question yet about what pattern that is, go ahead and throw in a comment, and I'll send you some free cryptocurrency. I'll message you on how to do that. Get your wallet address so I can send you some cryptocurrency. And also, any news articles that we talk about on our podcast are also posted throughout the day on the Facebook page, From No Crypto to No Crypto. If you want to learn a little bit more about how to get started in crypto, where to start, where to get your information, where to do your research, we've got a short cryptocurrency beginner's guide for sale on Amazon under the same name as this podcast as well, From No Crypto to No Crypto. It's a beginner's guide to cryptocurrency. It's available in paperback and Kindle ebook. You purchase the paperback, you get the Kindle ebook for free. A lot of great information there. It's not a long book. It is around a 42-page read, which just gives you the basics of what you need to know to get started and where to start to learn. This is a big learning process. Make sure you're getting the right information. And that is it for today's episode. Thank you for listening in, and we'll see you on the next episode.